Hey everyone, it's Julie here with TipRanks. Today we're taking a look at 3 top analyst stocks with some big upside potential. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 different top analyst stocks. These are stocks that have picked up recent ratings from some of Wall Street's very best. And not only do they rate these stocks a buy, but they also see some pretty impressive upside potential. We're talking double digits here. So we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. We found these stocks over on the TipRanks Top Analyst Stock page. Found right at the top of the Ideas menu, here I narrowed in on a medium to mega market cap and got my list down below, which I then sorted by price target. Further down, we can also see which sectors have been picking up the most ratings. You can check out the top analyst stocks for yourself over on the TipRanks website or right on the TipRanks mobile app, which you can download using the links down below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Let's dive right into today's stocks. First up is ACI Worldwide. They trade under the ticker ACIW, currently priced at about $46 per share. The stock is up 29% over the past year, but down 9% in the last 3 months. ACI Worldwide is a global software company that provides real-time payment and banking solutions. They develop platforms for digital payments, fraud prevention, and transaction processing, serving banks, merchants, and billers. Their software enables secure, scalable payment systems, including mobile payments, online banking, and cross-border transactions, with a focus on modernizing financial infrastructure for real-time cloud-based processing. Their latest earnings report came out May 8th, where the company did have an earnings and revenue beat, plus increased their full-year outlook. They saw their Q1 revenue grow 25% to $394.5 million. They also saw their payment software segment revenue increase 42%. And looking forward, they now anticipate full-year revenue to be in the range of $1.69 to $1.72 billion. Following those quarterly results, a 5-star analyst from D.A. Davidson did upgrade their rating on the stock to a buy. They said with the shares pulling back about 20% from late 2024 highs following strong Q1 results, they view the risk versus reward as more attractive. The firm believes the strong results over the last 5 quarters brought new fundamental and earnings momentum investors into the name who may not have appreciated how significantly quarter-to-quarter volatility in software license fees can impact quarterly results. ACI has 5 current analyst ratings and comes in as a strong buy, with 4 buys and 1 hold. And the average price target of $65 implies an upside potential of 42.5%. Looking at those ratings down below, a couple of them don't have price targets, and the others range from 30% upside to 67%. Our second top analyst stock is Modine Manufacturing. They trade under the ticker MOD, currently priced at over $92 per share. They are in the red about 3.5% over this past year, having fallen from highs back in January, but are in the green over the last few months, climbing up nearly 12%. Modine specializes in thermal management systems and solutions. They design, manufacture, and sell heat transfer equipment, including radiators, condensers, and HVAC systems, for industries like the automotive, commercial vehicle, construction, and agriculture, as well as data centers. They focus on energy-efficient technologies to manage heat in vehicles, buildings, and industrial applications, with a growing emphasis on EV and data center cooling solutions. Their latest quarterly report just came out on May 19th. Not only did they have an earnings and revenue beat, but they also saw record sales and profitability. Earnings per share of $1.12 beat estimates by 17 cents, and revenue of $647 million beat by nearly $16 million. They achieved their highest reported sales profitability in their history for the 3rd consecutive year, and their adjusted EBITDA increased 25%. Notably, they also saw their data center sales increase by 119% to $644 million. And following that report, we did have another analyst from D.A. Davidson weigh in with a buy rating. They noted that Modine's data center segment is experiencing significant growth, with the company gaining market and wallet share in North America. The potential for divestitures and additional restructuring efforts could further enhance profitability. Overall, the company's strong balance sheet with low net leverage and the potential for continued growth in the climate and data center business underpin their buy rating. Modine does just have 3 current analyst ratings, but comes in as a unanimous strong buy. And the average price target comes in at $140, implying an upside potential of 51%. Looking at those ratings down below, they range from 45% to 56% upside, so fairly close together. If you've made it all the way to our third stock today, then this is a reminder to make sure you've hit that thumbs up button. Last but not least, we're taking a look at Nomad Foods. They trade under the ticker NOMD, currently priced at $17.70. They are slightly in the red this past year, down 2.5%, but year to date are up over 7%, but have cooled off a bit in the last 3 months, down nearly 6%. Nomad Foods is Europe's leading frozen food company, manufacturing, marketing, and distributing branded frozen products across 22 countries. Their portfolio includes iconic brands like Bird's Eye, Findus, and Igloo, offering fish, vegetables, poultry, pizza, and plant-based meals. They emphasize sustainability and focus on healthier, non-high-fat salt sugar products. They shared their latest quarterly report on May 8th. Earnings were in line with expectations, while revenue did decline slightly. They reported Q1 earnings per share of 39 cents, and revenue came in at 760 million euros, which did fall about 3% year over year. They did experience greater than expected retail inventory destocking, causing their net sales to lag, and the company's input cost outlook has increased modestly. But the company did see their net sales for growth platforms rise 36% year over year. And following that quarterly report, a 5-star analyst from BTIG reiterated their buy rating. They said that despite recent challenges such as volume declines and inventory destocking, they remain optimistic about the company's medium-term margin and cash flow opportunities. The valuation appears discounted, making it an attractive investment, even though there's no immediate catalyst to drive investor enthusiasm. And once again, we have a unanimous strong buy rating, with 4 current analysts weighing in on the stock. The average price target comes in at $24.75, implying an upside potential of nearly 40%. Looking at those price targets down below, they range from 29% up to 46%. So that is a quick look at 3 stocks, all with recent buy ratings from some top-ranked analysts and price targets that would imply double-digit upside. Let me know your thoughts on these companies and which of these catches your eye the most. I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.